Somebody has to mute. So Jake, it's time to go. We have some noise in the background. I'm wondering if people can mute, please.
Yes, Greg.
Socorro, Greg, and others, if you could mute if you haven't, that would be great.
I think it's Greg.
Okay, and I'm going to get started now. It's 9 a.m. I hope people can hear me. Okay, well, hello everyone. Welcome to Toronto Center's webinar on digitalization of finance. This is the second webinar of a 5-webinar series that we're doing on the revised Basel core principles. I am Babak Abbassadeh, CEO of Toronto Center, and delighted to be opening this. We congratulate the Basel Committee on updating the core principles, reflecting priorities of mitigating financial risks, strengthening macroprudential supervision, promoting operational resilience, reinforcing corporate governance and risk management, addressing new emerging risks, including digitalization of finance and climate risk. And today we're focusing on digitalization. Advances in digitalization and financial technology continue to transform and disrupt the landscape of the financial system. While digitalization can benefit both banks and their customers, it can also create new vulnerabilities and amplify existing risks to banks and financial stability. This calls for stronger vigilance by supervisors. Today, our distinguished panel will discuss regulatory and supervisory implications of innovative technologies and their applications, as well as new competitors and business models. We have assembled a very, very strong team, and we've known them, we've seen them at our programs, so they've been tested. Socorro Hyson, Superintendent Banks, Insurance and Pension Fund Administrators of Peru, is one of our speakers, and she's also a member of our board of directors here at Toronto Center for Global Leadership in Financial Supervision. Our friend Francesca Hopwood-Road is the head of the BIS London Innovation Center, and this conversation is moderated by our good friend and board member Jennifer Elliott, who's the advisor at the Monetary Capital Development Markets of IMF. Jennifer, as I mentioned, is a member of our board and a frequent moderator. She does such a good job that she keeps getting dragged into this. So welcome to our speakers and moderator. You have seen their bios. Now it is my pleasure to hand the platform over to you, Jennifer. Thank you.
Thanks, Babak. It's always great to be at the Toronto Center, where we have the opportunity to talk about issues really in front of supervisors and central banks, and issues that are kind of issues we're all still finding our way through. So the Basel Committee's finally taken fintech into the standards that we use to benchmark supervision around the world. But of course, it's a moving target, right? So we're here to talk about that moving target. And I'm going to start with a question for you, Francesca, because the BIS has set up these innovation hubs to kind of track and think about new technology and what it means. So tell us what's happening at the London BIS hub, what you guys are thinking about, and what your priorities are.
Thank you so much, Jennifer, and thank you to the Toronto Centre for inviting me to join you all today. It's a real privilege to be with you and joining so many colleagues from around the world. So yes, Jennifer, in London, perhaps I can zoom out a little bit and talk about the Innovation Hub. We work across 6 domains, all the way from central bank digital currencies, financial market infrastructure, supervisory technology and regulatory technology, all the way through to green finance. In London, we have been up and running for about 2.5 years now. So we're kind of one of the younger siblings of the 7 centres that make up the Innovation Hub. And our areas of focus are in kind of 3 key areas within those 6. So one of our first projects was a Project Rosalind, which looked at retail CBDC. We've also been doing some work in the next generation financial market infrastructure space. But I think what's really pertinent for today's call is the work that we've been doing on the supervisory technology and regulatory technology side of the house, if I can put it that way. And what we've been looking at is how we can develop tools, proof of concepts, prototypes that really support supervisors and regulators in emerging areas of regulation principally. So, we've been looking at digital assets. So, for example, in London, we have Project Pixdrill, which will be launching the report next month. So do please look out for that on our website. And that's looking at how we can develop tools to support the monitoring of stable coins, because we know that around the world, legislation and regulation to support the monitoring of stable coins is coming into force. And so we've been really thinking about how we can go on the front foot, if you like, and take a technology first approach to supporting our supervisory colleagues with a tool that will enable them to see the assets and liabilities behind stable coins and help them to monitor that. And that motif actually is something we see quite a lot across our work in the Innovation Hub more broadly around supervisory technology, where, whether it's our colleagues in the Eurosystem who with Project Atlas, our colleagues in Singapore with their work in the climate space, looking at how we can support supervisors with these emerging areas that are coming into our regulatory perimeter around green finance. But that being said, we also recognise deeply that there is a significant hinterland, isn't there, of issues around regulatory reporting, AML, financial crime, which also require a lot of thought and work to really continue to boost that. And so in London, we have been doing a lot of work to think about what the hub-wide strategy to SupTech is and how we can really support our colleagues in experimenting with technology on some of those knotty, thorny problems that have maybe plagued us for many years, and how we can really bring technology to the fore. And so perhaps later on in the conversation, I can delve into that in a bit more detail.
Thanks, Francesca. That's super nice that you added this idea of opportunities for supervisors from technology, because sort of fighting technology with technology seems like a positive. And I don't mean to say that technology is just a risk. We all enjoy the benefits of technology. So that's fantastic. Thanks. We're going to go to Socorro for the sober look at supervision on the front line. So Socorro, given all your experience, many years of supervision, not just in Peru, where of course you're heading supervision there, but also internationally. So from your perspective, from the front line, how do you see banks dealing with mitigating the op risk as stemming from technology?
Well, thanks, Jennifer. First, let me give you a little bit of context. Digitalization of finance is growing at a very fast pace in Peru, as in with most of other countries. The use of cloud computing, apps are broad-based. And let me give you just a couple of examples of the deep changes that are taking place. For instance, we follow statistics of the development of new products or significant changes in products in Peru. And only in 2023, the changes or new products increased by 60%. And we received 496 risk reports on these changes on products. That's a lot for one single year for about the 60 institutions that we have in Peru. 34% of these changes were related to digital transformations. Also, the use of models has grown significantly in Peru. There are 972 models being used in Peru right now, only credit risk, without counting the other models. 61% of these models are used by systemic banks, by the 5 systemic banks we have. So, and 20% of the models are based on very new technologies. So this is an example of the changes that we are seeing. The most common uses for models are loan approval, pricing, borrower segmentation, things like that. So how do we deal with this? Well, first of all, we have a very robust supervisory approach, which generally aims at being regularly updated to follow the new risks that we see, the new problems that we are identifying, and of course the changes in international standards. So we update every year our strategic plans to fine-tune the priorities, to see what needs to be done faster or slower. And we also review our regulation regularly. For instance, in 2021, we changed our information security and cyber risk regulation, and also to introduce digital onboarding, authentication requirements for APIs and things like that. And also we enhanced regulations governing service providers. And more recently, in 2024, we have issued a new regulation requiring banks to manage the risks from the use of models. And I mean, this is clearly important for us, given the broad-based expansion of these models and the intensive use for approval of credits and pricing of credits. So this is key for us. And right now, we are also welcoming the approval of the BCPs by the Basel Committee, and we are reviewing our operational risk regulation, which probably will be issued in 2025, to introduce the concept of operational resilience and to enhance, again, the requirements for third-party providers and the management of change. So these are some of the things that we are doing. We have a team of specialized supervisors, and we do follow this. They follow very closely the management of change by banks. We have risk reports for new products or significant changes in products that banks have to conduct themselves, and later on they have to give us a report on all these changes so that we can try to see which things are changing in the system, which innovations are taking place, and examine whether we feel that there are some risks that are being missed in these changes. So this is an important part of these product reports. Reports of new products are an important part of our supervisory process. Another important part of our supervisory process is the operational losses matrix that we receive on a quarterly basis, and so we can follow also what is going on in the system. So basically, these are some tools that we are using to deal with operational risk in our system.
So it's interesting, you're talking about the use of technology, then thinking about change management, risk management, and some of that is technology, and some of what's in your toolkit is technology, but some of it is just sort of a governance concern, right? How are you managing it? How does the bank have the capacity to manage it? So I'm going to throw you both an extra question you're not prepared for. And that's a question of, when you think about soup tech, which really is appealing. Authorities don't have enough resources. Technology moves fast. The data sets are huge. All of those things. So you can see that technology's got to be part of the solution. But in terms of those in the audience who are working in supervisory organization, what do they need to think about in embedding soup tech then? I mean, thinking about what Socorro is talking about, governance issues, change management, risk management thoughts. Sorry to throw you a question that wasn't on the list. Socorro, what are you thinking about?
Well, I mean, clearly the constraint, the key constraint is resources. And really, we do have to prioritize, because we do not have resources to do all the things we want to do. I mean, we have a long list of things that keeps getting pushed down the line because other more important things comes up. Yeah. And so we have to make decisions. And we have a strong team of specialized supervisors on operational risk, on information technology risk, also on model risk. but they are not enough to do all the things we do. We also use international cooperation and assistance from multilateral institutions and from other countries that are helping us in some aspects. That helps a lot, and it's difficult. In capacity building, we do as much as we can on these issues.
So this leads us to Francesca then. It's very cool that the BIS is working on that on an international basis because it helps. So Francesca, what do you think about those risks of embedding soup type?
This is such an important question, Jennifer, and I'm so pleased you asked it, because I think, you know, I've been working in and around the field of SupTech now for the last 5 or 6 years. You know, I was at the UK's Financial Conduct Authority, where I led their SupTech and RegTech program for several years before I joined the Innovation Hub at the BIS a few years ago. And I think, you know, what we have seen with SupTech is we have seen lots of experimentation. We have seen lots of proof of concepts. We have seen lots of people get genuinely excited, and rightly so, about the art of the possible. You know, the points exactly as, you know, as Socorro mentioned, and as you've mentioned about, you know, what it can enable. But if I was, to be honest, a couple of years ago, I was feeling a little downhearted because I was thinking, okay, well, there's this proliferation of experimentation, but are our supervisors really reaping the benefits of this? Is this really being able to strengthen their hand in terms of automating those manual processes, in terms of helping them apply their judgment in those fields where, you know, that is their kind of their expertise, and how do we enable that to happen? And I was a little worried that we were kind of in a cycle, not with any criticism attached, of experimentation, but we weren't really moving it out. And part of that, I think, was because a lot of these tools were being developed for supervisors, but not necessarily with supervisors. They weren't being developed, you know, hand in glove with the people who are going to be using them. And I think what we have seen over the last couple of years, and I am delighted about it, I can't tell you, is that we're now not having a conversation about the technology, we're having a conversation about the people. I think we've proven out that the technology can do most of the things that we want it to do. Yeah. Now it's about saying, you know, but our people are the ones that are going to be using the technology. It's there are supervisors in the front line who need to be equipped with this. Has anyone asked them what they need to do, what they would like, and how this is going to, you know, when they come in on a Monday morning with their cup of coffee, what is it going to look like on their workbench? How are they going to integrate this tool? Do they need this tool? Or is it a tool that, you know, some brilliant people, but in a technology function, have thought up, that not necessarily thinking about how our supervisors are going to use this? So I think we're now starting to see much more of that co-location between our SMEs, our supervisors, and our technologists. And I am delighted about that. But I think then what you get to is the next challenge, which is how do you get that stickiness of adoption? Socorro talked so astutely about the kind of constraints and the challenges we face, you know, and so how are you really smart about making sure that the tools that you invest in then stick with your frontline supervisors so they can use them and they can shorten that, you know, that path around the manual effort that is often, you know, a big part of a part of roles. So I think there is now a really important conversation about the people and culture change required to kind of engage that. What kind of skills adoption do we need? You can tell I'm passionate about this. I'm sorry, I'm getting all excited. This kind of skills that you need for your supervisors to really think about how do they harness and use these every day. What kind of supportive skills do they need around them, around, you know, the comms and the business change and all of those pieces, so that this investment that often organizations are having to really judiciously make, you know, where are they going to spend, you know, resource that is tight in the right places and in the best places. And I think I'm really heartened to see that we are now moving out of a cycle of experimentation into production, and that more and more we are having a global conversation about, and it's hard, but how do we really get that stickiness of take up and adoption of the tools that we're developing? I'll stop there. But yeah, I could go on, as you can see.
You know, this is a place for people who are excited about supervision, so it's good. So let's move to thinking about how the industry might be changing as a result of technology. So, Socorro, how do you see competition in technology enabling new entrants? Or is it what I have observed in some countries, which is once the technology looks good, the big guys buy it up and you don't have that competition. So what are you seeing? Like in Peru, what have you seen? And maybe in the neighborhood?
Yeah, there's a lot of that, of buying up or partnering with startups. In Peru, we have three main areas, I think, in which new entrants compete with banks. Payments, currency exchange, and credit. Those are the main drivers. On payments, there are many applications, both operated by banks and by startups. And but the ones operated by banks have the biggest chunk of the market, much more traffic. In early 2023, the Central Bank of Peru, which is a regulator of the payment system, approved a regulation requiring all these apps to have interoperability, so that they could talk to each other, because at the beginning they were talking among themselves, basically, or in very few clusters, separated. But so once this interoperability regulation has come into place in a gradual process, what we have seen is an explosion of payment transit. And for instance, in 2019, we had 500,000 transactions a month taking place in the country through digital wallets. In March 2024, we have 475 million only in 1 month. So it's really a revolutionary change that the one that is taking place. It is most impressive right now in urban areas along the coast, but little by little it's starting to percolate to rural areas. So I think we're only seeing the tip of the iceberg in this process. The second aspect is currency exchange. In currency exchange, the apps have been very successful in attracting especially young people, because they have lower margins, and they're very fast to do the currency exchange, dollars versus soles. So in this aspect, the banks were a little slow, but now they have already caught up. They are giving lower prices in their apps. They have introduced currency exchange in their apps, and they are giving better rates in their digital apps than in the branches, so that they are fostering customers to go to the apps. So this is evolving to also the banks squeezing the market again. And then on loans, we have a lot of loan applications, but we have not identified companies that can really make a dent in what the banks are doing. And there are some mixed reviews in these loan applications. Some are well established, like PrestaPyme, who has a lot of customers. It's been operating for several years. They have about $200 million of credit. It's still small relative to the size of the market, but it is working. But there are others that come and go very fast. No, they start and they come and go. And among those that come and go, more recently we have a lot of fraudulent applications that offer these cheap loans, and really what they are doing is blackmailing, extorting people, charging huge interest rates. They are really criminal organizations that are, and we do have a challenge with those. Everybody has a challenge with those, because it's given a bad reputation to loan applications, because people do not know whether a fintech that grants loans is legitimate or it's fraudulent. We are giving every month lists of these applications to consumers, the ones that are fraudulent, to try to alert consumers of the ones that we have identified that are fraudulent. But it's always a catch-up. And then there you have some of these companies advertising YouTube, in Facebook, in different applications. And you can download it in this Google Play Store or Samsung Play Store, Apple Play Store. And then we talk to the big service providers. After a while, they take the application down after we tell them that it's fraudulent, but it takes a while, and immediately they change the name of the app, and they have another one. So it is a huge challenge. So in general, let me go back to the question. In general, what you have is the large banks being ahead of the curve in general, and some of the smaller banks, especially microfinance institutions, feeling some squeeze of the competition, especially because these new technologies require a lot of capital, a lot of muscle to be able to grow, to innovate at the pace that these people are doing it. And so the ones who cannot innovate at that fast pace are feeling the competition. But the rest of the bigger size of the market, the big ones are really in good shape so far. That's what we're looking.
So it's very interesting because you started with a policy that changed things, which is interoperability, right? That really, it's not just industry driven, it's also what policymakers can do, which is interesting. But then, of course, the industry. And yeah, I think we do have to recognize that the downside is the fraud, which is everywhere, right? Fraud, and then, you know, even the most financially literate can get caught up in that sort of stuff. So, all right. So Francesca, you already told us quite a bit about what your priorities are and what you're working on. And it was really fascinated by the stablecoin monitoring, because that is a little bit on the cutting edge for regulators and also in financial innovation. So can you tell us a little bit more about how you're thinking about what you see gaps and how you're thinking about addressing those gaps in the sort of ecosystem of the financial sector?
Absolutely. So one of the things that I think is very important in the subtech space is, you know, thinking about the role and remit that we have as the Biz Innovation Hub is to experiment with technology in order to create public goods for you as supervisors and central banks to consume. So you are our customers. And so what is terribly important in the supervisory technologies, you know, part of our remit for us is to think about how do we really understand and marry up your needs so that we're creating public goods that meet your needs with the technology. And so we've been doing a lot of work over the last few years to think about how we can best kind of affect that in the supervisory technology space. And later this year, what we're going to be hosting in October in Switzerland is a tech sprint. And I noticed there was a question that popped up from a colleague, a participant, about kind of what are some of the tools and techniques we can use to support. And tech sprints are one very, very good and effective tool that we can use. What is a tech sprint? A tech sprint is essentially bringing together mixed teams of different disciplines. So you might have technologists, you might have data people, you might have subject matter experts, in this case supervisors, and you bring them together around really tough problems. You bring them together. I won't say you lock them in a room, but you know, not far off, for a couple of days, and you get them to think hard, probably with cold towels on their heads, about the challenges you face, to create at the end a proof of concept or a prototype. And we really want to bring, you know, these are often industry, these often work really well with industry. But what we're doing in October is we're bringing together, for the first time, I think I can say that, a tech sprint for supervisors. So we're inviting the supervisory community from across the world to come together in Switzerland. We have done a lot of work over the past 3 or 4 months to really understand where are the common pain points, but also common opportunities that people want to come together around. Because, you know, again, back to Socorro's point, in a world that is quite constrained around resources, if we're going to create proof of concepts for colleagues on this call to hopefully use and consume and get value from, we want to make sure that it's meeting your needs. We don't want to create something that we think is a great idea, but actually, you guys tell us, it's not meeting our needs. So we've been doing a lot of work with over 25 different jurisdictions over the last 3 or 4 months to really get into the detail of what are the common pain points. And then we're going to be bringing together teams together in person in Switzerland later this year over 2 days to go after these, and at the end of them, hopefully create a suite of proof of concepts that we can then pick up and further develop, knowing that they are already aligned to the things that our colleagues in the supervisory community care about. And I think that's hugely important because of the resource constraints that Socorro has already talked about, but also because of this challenge, again, which Socorro has talked about. It was as if we had rehearsed this, that, how do we balance as a community being at the leading edge, understanding how fintech is evolving, how emerging technologies are evolving and changing what we do and how we might need to respond, but also balance that with also if I can put it this way, the day-to-day business as usual work that is ever the case for our supervisors around regulatory reporting, AML, CFT, risk identification, all of those things. How do we kind of make sure that our experimentation covers both of those poles? And that we are bringing kind of the best of technology to really focus our efforts in those key areas. And so that's a really key priority area for us, Jennifer, in the next 6 months. And my team is hard at work doing that. And so if colleagues on this call are interested in finding out more, please do get in touch. We would be delighted to have you involved. And then, of course, we are continuing with our wider supervisory technology remit, continuing to think about, where are there emerging areas that are coming into the regulatory perimeter that would benefit from a tech-first approach, and obviously digital asset supervision and green finance supervision are obviously key areas around this, but also thinking about, as I said, some of those knottier legacy challenges that could benefit from, I would say, maturing technology. When I first started in the subtech field, often the challenge we had when experimenting with technology and things around reg reporting, for example, was the technology wasn't quite mature enough to really be, deployed at scale. I think we have seen such an acceleration over the last few years that I think some of the things that, were really quite tricky for us to tackle have now come back onto the table, if you like. And I would put some challenges around the reg reporting space squarely in that space.
So, everybody on this webinar now wants to be invited to something called a tech sprint, right? I mean,
why would you not? I've just told you you're going to get locked in a room for 2 days and think big thoughts under a cold towel. I mean, I don't think I could have sold it any harder.
What I find inspiring about this is we're taking technology out of the sort of clouds and bringing it down to like our everyday life, and every single one of us can think of things that we would like to improve. And sometimes we don't know if the technology could do that, but we know that something needs to be done. So that's fabulous. Yeah. All right, so let's go into, there's already some questions in the chat with you, which you have answered, Francesca. So that's great with that answer. But we'll come back to the questions, one more round from me though. So Socorro, thinking about going ahead, and this question is also in the chat. What would you like to see in terms of international collaboration on technology and these issues of the challenges that you've laid out, which I think are very typical for supervisors? Some of the things Francesca mentioned, how would you like to see on an international level that collaboration?
I think that what the BIS Innovation Hub is doing is great. I think it is going to help a lot. In general, we need a lot of help with capacity building in all supervisory agencies across the emerging world and developed world too. But it's probably the press of scarcity of resources is more important in the emerging world. we do need to exchange information about new risks that are emerging, about the subtech technology that works. I mean, what have some countries done that is helping them deal with the new risks and is helping their financial institutions to deal with the new risks? So an information exchange on what works, what has already been proven in some countries would be great. And also, of course, there needs to be some exchange of information regarding cybersecurity among countries to try to be keep pace with the innovation of the criminal side, of the dark side, because the dark side innovates all the time and is creating threats all over the world. And some things that happen in one place in the world are replicated later on in another place in the world. So the criminals learn from each other. So we have to learn faster from each other. And then the other thing where collaboration is important is some sort of conversation or standards for big techs. We need to deal with the systemic nature and concentration of these big techs in providing services to our financial system and to the lack of jurisdiction that most countries have regarding big techs. And so how are we together going to work on this? And this is it's going to be a very challenging issue, especially if the world keeps on getting fragmented. So we have to deal with that. It is going to be a big test on our will, our capacity to collaborate on something that is critical to all of us. So those are the main things, I think.
Sorry, technology, I needed to take off the mute. So thank you. Francesca, so just the last word on, I'm taking you back to the clouds now. So the last word on what you think in terms of technology, what's going to have the most impact on supervisors and central banks?
So, I mean, I think, I think the words on everybody's lips are, at the moment, isn't it, is around generative AI and large language models. I think, you can't really avoid that at the moment, either in our personal lives or our professional lives. And I think, I think there's a real spectrum, again, exactly to Socorro's point, if I can just build on that in this space, is kind of there. I think there's a real spectrum for some, and there are a few, there are not many, there are a few authorities who are actively experimenting with generative AI and the role it can play. But actually, I think there is a much larger group of authorities who would benefit and be support and are interested in going, okay, let me help me understand this. What is this? What does it mean? How can I start to kind of hold it up to the light, if you like, and explore it and understand it, understand the risks, understand the opportunities, how is it being used, by maybe the firms that I supervise? How might we consider using it? I think there is a whole host of kind of knowledge transfer and exploration and safe spaces for these kinds of conversations with colleagues who might have the same questions, might have a different set of questions. So I think but I think there is still the potential for that is extraordinary. I was at a panel discussion a couple of months ago, and I was sat next to someone from industry who was kind of waxing lyrical about how wonderful generative AI was and how it accelerated their path to production for their tools from 6 months to 6 weeks. And I kind of sat next to him aghast, because I thought, actually, a lot of us are having conversations about, how do we kind of get to grips with what this thing is? And so I think there is quite a kind of a potential delta there between the industry and the confidence and comfort levels to really understand what the implications are. That being said, I think it has quite a lot, a lot of potential, and it is very well worth exploring. But the other thing I would say is, I think one of the challenges we face in the space of technology, because it is moving so quickly, is how you kind of keep a spread, an eye on the things that are new and worth exploring and worth engaging with, but also actually that sort of long tail of activity which is your bread and butter and is the things that you do every day, and whether that's around what kind of data strategy do you need, what kind of subtext strategy you need. And I've seen some of the questions coming through around that. I think the potential of emerging technologies is fabulous, and we've talked about AI, and I also think there is a lot that we shouldn't lose sight of around existing technology that could be further explored and examined for its utility for us as a community as well.
Okay, thanks. So I'm going to bring you back to AI right away, because there's a question in the chat. Maybe we'll get Socorro to opine first, and then you, which is, can supervisors use AI? So I think Francesca addressed it's a bit worrisome when you hear some of the hyperbole in the industry about what can be done and what they're thinking about, and we have to catch up. But in terms of from the supervision side, are we going to be able to use AI? I mean, one thing I think about are these, for example, in market regulation, you would think about those vast trading data sets, and surely AI is going to be helpful for that, but I can barely use ChatGPT, so I'm not the person to opine on that. It just seems intuitive, but I don't know. Socorro, what do you think AI has potential?
Well, I personally can't use it either, but my supervisory teams are already experimenting and using it for some purposes. There is machine learning and things like that are helping us. At least I have two examples that we're using. One for anti-money laundering, in helping us. We receive a lot of reports of suspicious transactions, and those are basically unstructured data. And so the use of technology to help us relate a report with another one, or to see if this report helps build up a case for something else. So that and to understand what are the key drivers and to prioritize which reports need analyzing and which don't. That is a use that is already being made in Peru, and it's working. It's starting to work because it's an early stage. And a second use that we have so far has to do with examining consumer complaints in social media. Basically, a year ago, we had a service that would give us, basically flagged some of the important phrases that were related to financial institutions and the issues. But the service had limitations. So now we were working with technical assistance, and we're building something that uses machine learning to basically analyze much more volume of information much faster, to be able to identify what are the aspects that consumers are complaining about. And so that is worked into our supervisory processes to see if there is a need to pay more attention to an aspect of supervision, or to make a change in regulation or things like that, or needs to give alerts to the financial institutions about that. So those are two examples that we're using. I think this is just also, again, the tip of the iceberg. We would like to use it for examining the several of the reports that we receive from financial institutions that are not the statistical reports, but the other type of reports that we receive that take, for instance, external audit reports or internal audit reports. Those are very resource consuming to be examined. If you can, without examining each individual report, get a way to prioritize which one is more important than the others, you will save resources. So there are many ways.
This is fantastic.
It has a lot of potential.
No, that's and the resource saving is really important. I mean, I know working in different countries for the IMF, we see a lot of data quality issues, which would be one thing underlying, you know, your ability to do that, but it might also reveal them and help you figure that out. So it's just something that occurred to me about and I think I've stolen one of Francesca's lines by the look of it. So Francesca, soup tech and AI.
So I think, I mean, yeah, to echo Socorro's points, I think from our vantage point, you know, we have seen authorities have used AI, whether that's unsupervised or supervised machine learning in various guises for several years now across a range of different use cases. So I think, you know, it is definitely being used. And used in a variety of ways. And I think if I can kind of conceptualize a couple of kind of key ways, you know, obviously it's about reducing manual effort. So, you know, the review of, you know, large packs of unstructured information that you have to read through, you know, how things like natural language processing can really help you pick up the key themes, sentiment analysis on social media posts, for example. You know, another thing is around identifying patterns. So Socorro, you talked about you know, closing down an app only for it to pop up under in another guise somewhere else the next day around fraudulent activity. How you can use, you know, pattern recognition to understand the connections of the people who are running those kinds of things and be able to track and monitor those much more in an automated fashion rather than relying on your staff to be kind of trawling through and working out where those patterns exist. And then into the predictive space, you know, how can you use data to understand and identify connections and where issues might be arising? And I think we have seen, you know, various techniques and tools over the last 5 or so years that really speak to that. As I touched on, I think, you know, this emerging generation of AI around generative AI, you know, we are seeing a few agencies who are actively engaged, but we're also seeing a lot that are curious, if I can put it like this, you know, wanting to press their nose up against the glass and understand it in more detail. Understand how their firms might be using it, but also how they might use it as well. So I think there is a huge amount, but as you said rightly so, Jennifer, there is a huge amount that, and I think it touches maybe on another question in the chat around what enables a subtech strategy. Data. I mean, Socorro's talked about it. Unstructured data, structured data. You need to think about your subtech strategy along with your data strategy. The two need to go kind of hand in hand when thinking about it. And again, thinking about kind of therefore the multidisciplinary effect. You know, your data gurus, your technologists, your SMEs all need to come together in thinking about how can we best enable the use and adoption and experimentation with technology.
Exactly.
Thanks. You know, that leads us to I thought a really good question, which is, so we've talked a bit about international collaboration. I really want to hang on to the points about sharing practice and what's worked and what hasn't worked, because I think that's key. And Socorro, both of you made that point. But Socorro, internally, how do you get people to talk to each other? All of us work in institutions. We know that the IT guys speak a different speak. So internally, Francesca talked about it a bit in a tech sprint in terms of industry and what, and within the regulator as well. But in a practical sense, inside a supervisor, how do you get people to talk to each other?
I don't know. We do have some committees, internal committees that are multidisciplinary. Like for instance, we have a digital governance committee that it deals with that, and it includes people from the law department and from the technical information department and from the research department and supervisory. So, and they are all sitting together discussing data issues, and they help us prioritize where our plans for the next year, and we do have a very limited IT resources internally, and then so we have to say, okay, we have this much resources, what are we going to use these resources for? And then you have all the areas competing with against each other to present their plans and say my plan is better than yours, different sectors, different so that they do talk to each other. I mean, that doesn't mean that they always agree, but there is information exchange and dialogue in our institution. I don't know if that is unusual or not.
I think it speaks to the internal culture and how important it is and as well. So, all right. So related to that, Francesca, banks talking to supervisors, always a fraught topic. So someone has a question, how do you get the industry talking to supervisors on the same wavelength? It sounds to me like you do a bit of that at the Innovation Hub.
Yeah. If I could just add a couple of points actually on the previous question, because I think it's such an important one, and it sounds like Socorro, you've got it sussed about how to do this. But if I could add a couple of points, I think tone from the top is really important. The kind of tone of an expectation of, we as a leadership group think that collaboration, coming together, utilizing data is really important, and setting that expectation, I think, is what I have observed is very, very powerful in enabling that. But also then thinking about how can you create communities of practice across your organization of people who are maybe kind of enthusiastic first adopters, who really want to kind of, they see it, we all know these people, they see an opportunity, they've seen something, they want to understand it more, they think there is something that they can contribute. And I think it's around, how that community is fostered and nurtured to bring that insight in, because they will often be your super connectors as well within organizations. They will know the people who are experiencing similar challenges, and I think that's that kind of, the importance of the formal roots and the governance roots, as Socorro talked about, is absolutely fundamental. And alongside that, I think kind of that tone from the top, but also how you foster communities. Sorry, you asked me a question, Jennifer, around engaging. So I let me caveat my response by saying, I am not a supervisor. I came from the UK's conduct regulator. I now am at the BIS. But what I do have a lot of experience of, successful or otherwise, is how do you create the spaces for conversation with industry? And that's can be culturally and behaviorally really challenging, because the starting point is often very different and the expectations might be very different. But I think it's really important. I saw this in my previous role. In order to really understand what technology could do for us as an organization, we needed to understand how it was being used by the regulatory technology community, and to get that inspiration in. And so how do you create the spaces for tech fairs, what things we called technos, where you would invite firms in to showcase their technology, and ask questions and probe at it and learn from it. And so I think it's around creating the spaces with the right frameworks, the right guardrails in place to do that in a way that engenders confidence and security, because obviously you are making a step change in that. Within the Biz Innovation Hub, in terms of the delivery of our work, we partner with the private sector a lot in the delivery of our projects. And the London Centre of the Biz Innovation Hub is no different. And we do that for a couple of reasons, being really clear-eyed that often the private sector has a line of sight into and use of technology and types of technology that we simply don't have. It's around capacity, it's around capability, and so thinking about how we create those partnerships, again, safely and securely and with the right parameters and guardrails in place, we give a lot of thought to. We are very intentional about it. And the year before last, we ran a tech sprint on our Project Rosalind in London, which was a retail CBDC project. We opened up what we had built, which was a set of APIs, and we invited the private sector to come in and build on the APIs that we had created. My team did an enormous amount of work before we even pressed the kind of go live button on the expressions of interest to make sure that we had our legal colleagues supporting us, our procurement colleagues supporting us, our comms colleagues supporting us. And again, I think it goes back to that kind of multidisciplinary group, who are your core enablers to help you safely engage with the private sector, maybe in a way you haven't done before. But I'd also say that one of the things that we shouldn't lose sight of is the relationships with academia. Who in your university sectors are doing really exciting things, who might be experimenting with something for the first time. And it might then make the leap and the transfer over into the private sector, but kind of understanding who is doing interesting things and where within your communities, and thinking about your communities in a really broad sense, the regulated sector, the academic sector, who's on the edge of the regulatory perimeter, I would suggest is another helpful way to look at it.
Okay, thanks. I'm going to come back to you with this provocative question about whether you have a benchmarking tool, but just we often, well, maybe I'll ask you now. So we often get asked this at the IMF, how do you benchmark good regulation? And of course, we use the core principles from the Basel Committee to benchmark on a broad, high level, how is supervision being carried out. But the question for you in the chat is, are you developing a tool that will help regulators bench themselves against others in terms of how they're handling all of this? Digital maturity, I believe, is the phrase.
Yeah, no, because that's not in our remit. is the short answer, and I'm sorry to disappoint the participant who asked the question, who was hoping maybe I could point them to a neat little link. That's not within our remit in the Biz Innovation Hub, so we haven't been doing that. But there are others, the IMF included, the World Bank, who do a huge amount of work to understand kind of the capacity and the capability of institutions on this journey, and actually what are the building blocks to go on this journey of digital transformation within your organization. And I think that, and there are also kind of communities and networks building. So we in the Innovation Hub host an innovation network of practitioners across the central banking community who have an interest in innovation across the different domains that we work in. So there are communities to tap into, and I would encourage, Socorro, you talked so much about the importance of knowledge sharing and capacity building, and how do you maybe, not reinvent the wheel and learn from your peers and build on your peers and then feed that information back into the community. So I would encourage participants to seek out those sources of information, and obviously the Toronto Centre is a wonderful example in that space as well.
Yeah, thank you. I mean, every time you talk to Socorro, you learn how complicated it is, which means benchmarking it, good luck. And then you learn like practically how much still being done. So you just have to talk to Socorro for a while and you realize how hard that would be. So Socorro, I'm going to give you the last word. I will speak to the training thing in a minute, but you have a couple questions in here about handling disruptors and handling third-party service providers and how you manage that. And you talked a little bit about your new entrants. But any particular tips on how you prioritize, how you focus, what you think about?
Sure, good. I really don't understand the question.
So there was a question on how do you approach third-party service providers? Because I guess one of the things in technology is that there's a lot of outsourcing and a lot of third-party service providers. So that was one. I think we already spoke to the other question. Yeah, I think the other question's already been answered. So go ahead.
Yeah, well, in general, our regulation makes the financial institutions responsible regarding the relations with the third-party providers. So they do have to be responsible with what they subcontract, what services they are being provided. They are responsible if they buy models from there. They're responsible for understanding the parameters, understanding the risks that all these third-party providers bring to the table. So the regulation puts a lot of the weight on the financial institutions. But then sometimes when you deal with these cases of service providers that are related to unregulated companies, like these fraudulent companies, we do not regulate the company, so there's nothing to approach there. You have to approach this third-party provider directly. And then we basically try to meet the local provider, and we have had some success meeting and discussing things with international credit card companies like Visa, MasterCard, some success with dealing with Google, we approach them directly. But in general, most of the weight falls on the financial institutions, on ensuring that the risks that they are the ones taking the risks. So they have to understand the risks and control them.
You took us right back to risk management, culture, governance, all the things that matter to make technology successful. It's fantastic. All right. So we are at 10:01 and we're going to wrap up. Thank you so much. This was so interesting. I have more questions. We could talk another couple hours, and we will, because you'll both be back, I'm sure. There are still questions in the chat. Everybody wants to know what's happening. What I took away is the real need for collaboration and practice sharing, the real need for knowledge transfer, and fantastic hard job that supervisors are doing with limited resources, Socorro, you know. and thanks to the BIS for taking a bit of the load to experiment on behalf of everyone, which is, I think, incredibly valuable. All right, thanks very much, and everybody have a great day.
Thank you very much indeed. It's been a pleasure.